Robin Cross is on the line. He's with StoneX in Chicago. Robin, you talk lumber with us each and every week at this time, and you were talking about maybe an opportunity looming last week when we spoke, and gosh, I believe the other day I saw lumber limit up. Did I see that right?
You said it perfect, Marlon. That's exactly what had happened. I just felt like, it was down too long, too hard. So let's get into it a little bit. Well, good morning. Thank you for having me. First of all, we'll start with our prices. September lumber, which is expiring today at noon, is trading at $4.99, down 12 with only 4 trades. We came in with 8 cars of open interest, so I didn't expect any fireworks or anything like that, so I believe it's going to be a very orderly expiration. And sure enough, it's right with cash. November lumber is trading right now to a new recent low, $4.87 even, down $38.70, 145 trades over there, so quite a bit of volume for our first 17 minutes. Well, we talked about expiration, and I think, obviously the market was consumed with what's going to happen with September. Everybody always looks like that, and kind of, even though it has only a little bit of open interest, it still kind of sets the mood for the rest of the market, right? So last week I was looking, like you said, for a potential bear trap. And it was for a few reasons. Not necessarily because the market was oversold, because we were pretty neutral. But when you sell a 515-point break from recent summer highs into multi-month, multi-year lows and a discount to underlying cash, you better be cautious or a hedger to justify the sell, right? So then what happened? Soon as we got off the air, the market started creeping up last Thursday, and then we had a pretty explosive short covering rally. And I know it was a short covering rally simply because I was just kind of telling you about open interest the last couple of weeks, how we finally worked it up from its low, got it up out to 2,800 cars. Well, we lost 700 cars on this rally. And that was attributed to not only industry short covering, but also fund short covering. I've mentioned the funds have one of the biggest short positions they've had on in a while. So you figure, they don't take a lot of heat on that. So it's pretty, I don't want to say obvious, but it was very risky to sell the market at that cheap, right? So that really gave, production hedgers an opportunity to actually sell some premium, because we were trading at a discount for a couple of weeks to the underlying cash market. So at $576, that was about a $65 premium, but that's pretty decent. Then as soon as we're feeling good about the market, Marlon, then the reality of the disasters that would be the financial markets totally slipped into lumber. I mean, we were good. We were limit up. We're feeling great. Then when the Dow broke 1,000 points, that literally set the stage for the entire board. It really, everything was dead red, and, lumber was not immune to that situation. So now, a couple days later, we're off 80 points basically in 2 days, and I alerted the viewers to keep an eye on the technicals these past couple weeks, and sure enough, we had short covering perfectly above the 20-day moving average, right? And that was at 498. That took us all the way up to the 50-day at 560. Then we failed. It was a perfect textbook technical failure trade, but at this time, Marlon, I'm not necessarily overly optimistic or overly pessimistic. I think hedgers on the long and short side should wait for opportunities. Either buy a discount or look to sell a premium, and don't force the market. The one unknown factor of this market, I just have to mention, is the potential interest rate hike. I do believe that if the Feds raise a point or 3/4 of a point, housing and lumber will definitely feel some pain. And the only way to really right that pain is going to be from a mill production curtailment or some other, strike, something else to kind of stimulate this market. Other than that, I think you got to be very cautious on buying rallies.
That's
for
a good
sure.
point. And that is a really good point. And of course, we'll find out here in short order. We're just a few days away from finding out what the Fed wants to do. And lots of speculation on that. And yeah, you're right. That could have a big impact here on the housing markets. I know mortgage rates are already double what they were just a few months ago. Interesting stuff. Thanks, Robin, for talking with us and getting us up to date. Robin Cross of StoneX will be back and take a look at livestock trade right after this.